Hello everyone! Today we're going to talk about Bitcoin, which has hit another low and dropped today below $82,000, down to around $81,650. But let me remind you that in previous reviews, we analyzed Tesla stock and predicted a decline. It is going down. We also predicted a decline in Palantir stock. They are also going down. And against this backdrop, I mentioned that the stock market suggests there are few chances left for cryptocurrency to grow. At the same time, on November 18th, we did a review on Bitcoin. I said that if we close the daily candle on November 18th in green, and it did close green with the upper shadow shorter than the body of the candle, then it would be possible to try going long. The upper shadow turned out to be longer than the body of the candle, which means that this scenario did not work and a further decline was more likely. As for the further decline, I marked it with a stroke like this, roughly indicating the area, and you could say I guessed it. But now let's identify the key levels. Let's remove everything from the chart. What key levels immediately stand out? The first level is somewhere, well, first of all, right here. Yes, this is the lowest close in a very long time, back in April of this year. And then there's the intermediate level, where we had a pause at the candle's body and a correction. Here that's 84,250 and 76,322. Of course, we can also mark the trading range level right here. I would highlight this one as well, 87,952. No, not that one, a bit lower. Here there was a lower close, 87,325. And that one is important in its own way too. Well, let's mark this area as, let's just circle it with a pencil so we don't waste too much time, the zone of potential upward reversal. But for now, the target level for a decline seems to be a retest of this zone. There is absolutely no reason to open long positions despite such a big drop because we don't see any reversal patterns here. From my point of view, there are two basic reversal patterns. There may be more, but for me there are two. These are the ones I focus on. The first reversal pattern is a bullish engulfing. If we're talking about a decline, well, accordingly, if we're talking about a rise, meaning when the price is going up and we're expecting a reversal, then it's a bearish engulfing. In this case, the price is falling, so we're talking about a bullish engulfing. And the second pattern is convergence or bullish divergence. This is when the price lows are getting lower, but the lows of the corresponding indicator are not decreasing. Let me explain, because maybe someone doesn't understand this. What does it mean that the lows are not decreasing? After all, they're lows. Look, here is one price low, and here is another price low. The first one is higher, the second one is lower. So the low has been updated, it became lower. At the same time, on the RSI indicator, the low corresponding to this price value is here. And the low corresponding to this price low is here. This means that the lows, along with the price, this is probably the right way to say it, are not being updated on the indicator. And when the line connecting the lows is pointing downward, while the line connecting the indicator's lows is pointing upward, this is called convergence or a bullish divergence. So, since there is neither of these patterns, neither an engulfing nor a convergence, we can't even consider any longs at all. At the same time, in theory, one could try to enter from the level of 76,322, or maybe even from the level of 82,350, where we are now if we saw such a pattern, for example, on the 4-hour time frame. We'll come back to that. Now I'll delete absolutely everything and we'll switch to the weekly candles. There's quite an interesting situation here. Take note. On the one hand, we've reached the 100-week moving average, and there could be a bounce here. A bounce to where? To the area of the 50-week moving average. And then again and again and again with a higher probability of breaking downward. But there's another point. The RSI has come very close to the value of 30, and that's the target zone. But we haven't reached it yet. And that means it's not very wise to open a long position right now from the perspective of the weekly candles because the trend is clearly downward. Yes, of course, the 100-week moving average serves as a reference point, but nothing more. That's not a reason to go long in a downtrend. Now let's look at the 4-hour candles and maybe also take a look at the monthly ones. What do we see on the 4-hour candles? What we see is that right now, right here, the price is making new lows and the RSI is also making new lows. So there is no reversal here, no convergence, divergence, or anything like that. It's simply a decline that continues. Don't try to catch falling knives because you might cut your hands if the knife keeps slipping down. Well, basically, even if it starts slipping upward, then it won't be a knife anymore. It'll be a rebound. Now let's look at the monthly candles. So what do we have here? Here we have a very important level. Here it is, the lowest monthly candle close. This was in March of this year. This level is $82,550. If our November candle closes lower, then with high probability, we'll see a further move down either to the $71,280 level or to the $58,974 level. Well, that's the most obvious scenario. Yes, you can also highlight this level, not the next one. Pay attention, because it was actually a retest of the 58,584 level, right? So basically it coincides with what I just mentioned. So this will be the target zone for a decline. That is, we're talking about the area of $60,000 to $70,000. Is it worth buying Bitcoin under these circumstances? Of course not. That's it. Well, let's wrap up the review here. Leave your comments. You can like this video right now. Subscribe to the channel if you haven't already. And wait for the next review, which will probably be about the Nasdaq or S&P 500 index. Goodbye.